Hello, options traders. Steve Ganz here. I've got a new trade in the start to finish series. I entered this trade here going into the close on, let's see, today is the 30th of April. And our market started selling off somewhat aggressively, but I don't know that had a huge impact on this trade. I've looked at this off and on over the past few days, and I've actually been able to enter this if I wanted to on a few different occasions. So, you will likely remember that I did a video about a week or so ago. If you haven't seen it, go back and look at it. It is on DJT, or Donald Trump's Truth Social stock. And that's right now acting like a meme stock. In other words, it's got people buying and selling options all over the place. No rhyme or reason as to how it's being treated. I think in many cases there are traders in here that maybe aren't not well educated traders or newer, not sure exactly what they're doing. And quite frankly, if you know what you're doing, you could take advantage of that. So let me show you what I mean by that. And in that video a couple weeks ago, I made a comment of, if it's too good to be true, it probably is. And I showed putting on a butterfly, and that I wanted to fill a butterfly that looked something like this. And this butterfly has 6-point wings, $6 wide wings. We can see that here on the put side and then here on the call side. So it's an equal wing butterfly where my longs on both sides are 6 points from my short. So my maximum risk in this trade would be $6 per butterfly, less whatever money I take in to get into this butterfly. Now, because of the really wide bid-ask spreads, I modeled up this butterfly, and it was modeling up as though I could get $6.20 in credit for selling this butterfly. Obviously, that's not going to happen. The broker won't let that happen. When I go and I put that order in, because I'm getting a credit that would be larger than the maximum risk, that would mean that I would have a trade with zero risk in the trade. So the broker just instantly refuses that order. They don't let that order go through. However, what I did in this particular case is I put an order out there to sell this put spread, and that order I put out at $4.16. Then I also put an order out to sell a call spread. That call spread filled at $1.90. Now I came into each one of these strikes and I plugged in my exact fill price. So I paid $2.90 for these long calls, and then I sold the short calls for $4.80. I sold the short puts for $11.98 and the long puts for $7.82. Again, I didn't enter these as an order for each individual strike. I just did the put spread. The market maker figured out whatever they wanted to give me for these two. But ultimately, I put an order out there for $4.16 on this. And then as soon as I got filled, I went and put this order out. Now, if you add up $4.16 and $1.90, that comes up to $6.06. So I got paid $6.06 for getting into a trade, and I did 10 of these, for getting into a trade that has a maximum risk of $6. What that means is, no matter what happens in this trade, in its current configuration, I will be up $60. Now, as this trade goes and works toward expiration, which is just a little over 2 weeks away, we can see that right now my P&L diagram shows really wonky. But that's irrelevant. It's showing really wonky here, the T0 line, this red line. It's showing as though after the close, and part of this is just because the bid-ask spreads really widen out after the close. Everybody pulls their offers, and so there aren't bids, there aren't asks, things like that. So during market hours, this would probably show as closer to break even. But I really don't care what this shows. This could show I was down $1,000. I know I'm not. I know the math in this trade, and I know that I have zero risk in this trade no matter what happens in this current configuration. So at the end of the day, I'm just going to wait for things to expire and see if they do happen to expire anywhere under this tent. It could be a really nice payday. Again, I have zero risk. I'm guaranteed of at least making about $50 on this trade at a bare minimum. Actually, my minimum profit, normally it would say minimum loss here, my minimum profit is going to be $60. So at the bare minimum, if this trade expires like this, I'll lock in $60. However, if this thing decays, I could have a $1,000, $2,000, $3,000 payday out of it. And it's just because the broker wouldn't let me enter this as a butterfly. So I ended up entering it in two separate trades, literally right back to back. I was filled on one a minute or two from getting filled on the other. And now I am in this fabulous position. Now, you'll notice that I said a couple of times here that in its current configuration. The reason I'm saying that is I previously was in a DJT trade where I had 3 cents in total risk in the trade. So it was very similar to this. It may have been a 5-point spread, and I sold that 5-point butterfly for $4.97. So I only had 3 cents worth of risk in the trade. However, I started getting assigned. So I got assigned a whole bunch of short shares. Not that I care, because again, these long strikes still protect me. So getting assigned the short shares of this, or getting assigned long shares of this, under normal circumstances is meaningless. It doesn't change my risk profile one bit. I just need to make sure that as this thing is expiring, that I go ahead and either cover my short shares or sell my long shares before these options expire, just so that I keep this profile intact. Now, what can impact this? It still doesn't change the risk profile, but if I get assigned short shares, the broker right now, they do not like people carrying short shares in any meme stock. It has nothing to do with the fact this is DJT. It's just a meme stock. And when you get into meme stocks that can explode in value or collapse in value very rapidly, they particularly don't like traders in short shares, because I could be short this at $49, and in the blink of an eye, it can open tomorrow morning at $90 for whatever reason, and then I am in huge trouble if I don't know how to use options and I don't have options covering this thing. So the bottom line is, brokers right now, if I get assigned short shares, I will have to work my way out of those short shares by buying to cover, and at the same time I buy to cover, I would sell some of these long calls. So it's not going to, at the end of the day, it's not going to change the profile. It just means that I may have to close out certain portions of this trade sooner than what I'd like, just because the broker doesn't want me holding short shares. But the whole structure essentially stays intact throughout the life of this trade. When I said a week or so ago, if it's too good to be true, it probably is. That is true, because I would have never gotten filled on this butterfly if I put it out there to try to sell it for $6.06 in credit when it only has $6 in risk. But by selling it or entering it as two separate trades, virtually back to back, I was able to achieve that objective of having this no risk. So just a little oddity that sometimes happens with meme stocks and wide bid-ask spreads, and I wanted to make sure I shared that with everyone. Take care.